We'll be diving into September 2022 Portland market update to give you a little bit more of an insight on what's happening with the interest rates, what's happening with the inflation, and what buyers and sellers are doing at this point. My name is William Singh. I'm a local agent here in Portland, Oregon. If you find any of this content helpful, it'd be wonderful if you could hit that like button, and on top of that, subscribe. If you do that, here's a quick consolation prize of a cute picture of my dog. So diving into things, we are looking at the interest rates right now, and they are at 6.7 on a national average. This is one of those things where we're going to continue to see these hikes in interest rates, and the whole point of that is for the Federal Reserve to really start cooling down the inflation.
Let that cool down a touch.
Their goal is about 2%. And if we're starting to look closer to kind of the beginning of the year, you'll notice that we were at 2.67. Now we're at 6.7. So it is a huge change, almost 4%. And just know for every 1% that the mortgage rates go up, 10% of your buying power will decrease. Buyers who were able to afford a lot more earlier on this year are now not able to do that, and it's pricing a lot of buyers out of the market, which is really cooling down demand. Now, with that, we can look at the inflation rates. So one of the two main components we're looking for is the all items, then all items minus food and energy. This is considered the core CPI. We actually did see a decrease in the inflation last month for July into August. But if you're looking at the core inflation, which is something that is a little bit more of a bigger factor, or something that the Federal Reserve looks at a little bit more, we actually increased a little bit more. So with that, we do have pretty high inflation right now, and the goal for the Fed is to get that down. So with that, they will continue to probably push up those interest rates in order to get the inflation under control. If you're looking to buy, just know that the likelihood of those interest rates continuing to go up are pretty high at this point. There's either 2 to 3 meetings left with the Federal Reserve for the rest of the year to present whether or not they'll be doing interest hikes. Until we start seeing the core inflation really start to level off or decrease, we'll most likely see a continuing in terms of the rising rates. Right now, I'm seeing estimates anywhere between 7 to 9% by the end of the year of the interest rates. So we'll have to kind of check and see where that's at. Now, moving on to the supply in the Portland metro area. So something to kind of consider is that we are still not quite in a buyer's market. In order to be in a buyer's market, we would have to be at the 6 months mark of inventory. Right now, we are at 1.7 months of inventory, something where, as you can see, inventory has still not quite reached where we were at prior to the pandemic. And in order to get to that point, we're going to most likely see or need a lot more demand dropping off along with the supply dropping off as well. So it is something where Portland's a little bit more unique in the sense that we do have a much more limited supply. We are not building quite a bit compared to areas like Phoenix or Austin, Texas, where you can start building a lot more. We have a lot more boundaries or limitations in the sense of permitting, and then also in terms of building, which takes a lot longer. So things to kind of keep in mind when we're looking at this. We are still shifting a lot more into being more favorable for buyers. So again, we are seeing a lot more offers getting accepted below list price or at list price with some closing costs. Something to kind of keep in mind when you are looking is, as a buyer, you might be able to get the seller to give you credits to buy down the rate, which would make it more affordable for you. Now, this is not the case for everything, but it's definitely the case for a lot of the scenarios we're looking at currently in the market. Switching to pending sales, we are going to be looking a little bit more at the velocity of transactions that are going to be going on. With the pending sales, we'll be able to see how the velocity of the sales has been decreasing, and we will probably see a cyclical cycle here. As you can see, that once we hit the winter months, that will start decreasing in terms of the amount of transactions going on, which will help in terms of the supply side of things. So we will see probably return later on this spring with more inventory coming on. Typically for sellers, they try to avoid selling in the late July to August timeframe, along with late November into December timeframe. Those are really not key times for buyers to be buying because they are typically busy with either summer activities and or the holiday season once that happens. So right now we are currently at 3,237 homes sold in the month of August. Now with this, the median days on market, and this is a 90-day look at, is going up. So we are seeing a 15-day median days on market, which is a good indicator saying that there's going to be a lot more inventory staying on the market for a longer period of time. Interest rates have, again, pulled back a lot of the urgency buyers are facing. So with that, it will be one of those things that we will see buyers have a little bit more time to decide, and there will probably be less offers on the table for a lot of sellers at this point, or maybe not as many as they should be expecting back in the spring of this year. Moving on to the median sale price, we are currently at $550,000. This is where we will most likely see a decrease in prices moving forward in the next 6 to 18 months. On some estimates, I'm seeing anywhere between 5 to 10% because of the limited growth capacity that Portland has. We probably won't have as many issues with having too much supply. And on a national level, we'll probably see prices dropping from 20 to 30%. So again, it just kind of depends, and these are estimates that are being produced. As we are switching into more individual markets, Portland is up first. And as you can see, we're starting to see these median days on market starting to increase, and this is looking more on a week-to-week basis. So the median days on market have increased to about 49 days in Portland. The median list price and median list price of new listings have kind of leveled off for the most part, but we are getting very close to a buyer's market at this point. And we're seeing up to 55% price decreases in the Portland market. This is a very important thing to note, that sellers are going to have to be adjusting very quickly. And if you're not pricing things initially very well, then it could potentially have a push on the time that you have on the market. So just something to kind of balance and understand when you are looking at these things. Moving on to Beaverton, we have a slightly better market for sellers. However, we're still seeing 42 days on the market for the median days on market. We're also still seeing 53% in terms of price decreases. So we will most likely see a continuation of this in terms of the price decreases along with median days on market. One thing to note is that we're also still moving into the winter, which is going to prolong those median days on market. And as we move into the springtime, that will most likely start shrinking because the buyer demand will be coming back. So some things to kind of keep in mind when we're looking at these areas. Hillsboro, it has a very similar tune right now, where we're still getting a little bit more inventory. It's starting to level off, but we're still seeing a large amount of price decreases. This is a common theme that you'll notice throughout all of these. We're at a 45 for the market action index for Hillsboro, and then Tigard has a little bit more limited inventory, and you'll notice that we still have price decreases, but there's a little bit less, and overall the median list price for these is a little bit higher. So as we kind of start moving into these larger lots in Tigard, you'll notice that the median list price will kind of increase. So with that, we have a market action index of 53. And then moving into Milwaukie, this is still one of the more affordable areas. So you can see that there's a little less price decreases, and we have a little bit more of a stronger market action index or higher market action index. So something to keep in mind, but overall, again, we're seeing anywhere between 45 to 52% of price decreases. And this is price decreases in the sense of all the listings, 46% of them are decreasing their prices. They're not decreasing their prices by 46% as a clarifier. So moving into the Gresham market, we're back down to the 45 market action index, a little bit higher on the median list price and still seeing really high price decreases in this area. With that, inventory is still a little bit higher in this area, but again, leveling off. And as we really move into these winter months, we'll most likely see a lot more leveling off and or decreases in the inventory. And Lake Oswego, wrapping it up at 42 for the market action index. With this, just know that we're looking at a different price point with the amount of the median list price. So it does kind of add a lot of different factors. We're still seeing about 41% decreases, or 41% for price decreases. So just kind of keep that in mind as well. Inventory again has somewhat staggered and or gone down a little bit. Should you buy or not? This is a question that I don't have a blanket answer for, and really gets back to basics. If you are a buyer who is starting to get priced out and they really can't afford to buy a house with the current interest rates, look at potentially seeing if you could get your interest rate bought down a little bit, but just know that it's okay to wait and start saving up for that. Interest rates will continue to go up, so if you're looking to buy and you really need to buy within the next 6 months, sooner would most likely be better than later, just based off of how long we're going to have to wait for those interest rates to then drop down. With that, if you are on that boat of it's going to take a little bit longer for you to get to that point where you feel comfortable, start saving up a lot more now. This is going to be your opportunity to really get the down payment that you're wanting, creating the emergency fund that you need, and making sure that you're ready for that next step. And always get pre-approved. If you have any questions about what those next steps are or understanding what you need to get ready, feel free to reach out. I'll make sure to have my contact information down below. Sellers, if you are looking for $100,000 over asking with appraisal gaps, coverage, and things of that nature, I am sorry to say that that ship has sailed at this point. If you are not aware of where the market's at right now and you are not pricing aggressively, you will be left in the dust and you will have a lot of issues in terms of selling your home for what you may want it to be. And what the market can handle right now is going to be two very different things. So with that, just be very realistic and start talking to a real estate agent and understanding the value of your home and where it is at right now, and kind of making sure that you have the pricing strategy adjust to what you are looking for right now as well. So for example, if you are looking to sell your place very quickly, then you need to be pricing accordingly and having that value be a little bit more on the conservative end, so that way you're attracting more buyers, especially with the current rate hikes. It's going to be something that you're going to have a smaller and smaller pool of buyers as time progresses, at least in the next 3 to 6 months. So keep that in mind when you're looking at this. If you're looking to sell and then buy, one of the major things you should be looking at is looking at alternative strategies. Is there things where you can pull out a HELOC and use that equity to then buy the next place and then turn your place into a rental? Looking at those alternatives is going to be a critical factor in really determining what would work best for you. And it would be also fantastic to talk to your agent, talk to your lender, and figure out what options you might have for yourself. And if, let's say that you are not wanting to move at all, but you're just trying to create more opportunities or create more freedom for yourself, looking at using HELOCs as a way to leverage your current equity and just have that reserve if needed is always a good choice as well. Investors, as you are looking at properties, it is going to be very critical for you to understand that the numbers really need to work in the short term. And if you do want to take on, for example, something that will not cash flow immediately, then just understand the fact that rates for rentals will most likely increase in the next couple years, because when we move into these recessionary periods, typically rents will continue to increase. Just this last year, we saw an increase of 26% in the Tri-County area. So one of those things that you need to kind of factor in and understand the short term, but long term, you need to be accounting for what those costs would be. And with that, not necessarily banking on the fact that interest rates will drop. and making sure that you have enough in reserve so that way you don't over leverage yourself. This is one of those times where if you have a lot of cash, making sure that you find the right deals to make it work for you is going to be very critical in order for you to stay in the game long term. Some of the opportunities that you might have as a investor, especially an owner-occupied investor, would be to look into single-family homes that have ADU or ADU potential. These would be great properties for you to live in yourself with a lower down payment, closer to that 5%, and then move into having that ADU built, and then either moving into that ADU or staying in the residence and then having that ADU supplement your income. This is one of the times where a lot of banks are going to be really restricting a lot of access. Some of the programs that had maybe 5 or 10% down are now requiring at bare minimum 15% down in order to do an owner-occupied loan for a small multifamily. So this is where we're going to have to get really creative to understand what's going to best fit you. If you found any of this content helpful, it'd be wonderful if you could hit that like button. And thank you so much for watching. I'll see you next time.